I don't think the United States realizes how weak it is to the start of their supply chains. As the tariffs opens up the Pandora's box maybe, and people start looking on the inside and paying attention to things that they just took for granted for a long time, I think that's going to have a massive impact, not just on copper, but the whole space as a whole. But you cannot lose the battle for AI.
If you are curious what it actually takes to get a copper mine into production from a grade and scale and jurisdiction, from a team and capital standpoint, then you're not going to want to miss this conversation with Ian Harris, who is the CEO of Copper Giant Resources, previously Libero. We spend today dissecting that information using the mines that have been put into production over the last 10 years as our benchmark. And towards the end of the conversation, we get into what might have changed in this new trade environment. You're not going to want to miss Ian's take at the end of this interview, but the whole thing is very education rich, and I loved it. If you're interested in copper, you're going to enjoy this. Here is Ian Harris on the Jay Martin Show. Enjoy.
This is Jay Martin.
Okay, here I am with Ian Harris. Ian, it's great to have you back on the show again. I'm looking forward to this one.
Thanks, Jay. Looking forward to it too.
Yeah, we're going to talk copper, and you're a familiar face on my show, but there's a new sign on the door, and we're going to talk about that today. And I wanted to have you on because the last we spoke was at my VRIC conference. You joined me on stage for a conversation with Sean Rusin, and we were talking about how to get a mine built effectively in today's environment, and ended up being one of the hits of the conference. But more importantly, copper ended up being one of the hits of the conference. And we were just joking about this before I hit record. Even on the uranium panel, people were talking about copper, right? It was definitely a theme. And your company, which was Libero Copper, and today we're going to talk about the new company, right? Copper Giant Resources. Recently, you're one of your cornerstone shareholders, Frank Giustra, legend in the business, entrepreneur and investor, also increased his shareholding in the company over 13% now in Libero Copper, which is now Copper Giant Resources. So I feel like we have a lot to get caught up on because those are two massive headlines since the last time we spoke. I'm up to speed on your drill results. We're going to talk about that. But at a high level, Ian, what's been happening within the company? What's going on?
Yeah, so let me take a little step back. Frank goes to Saudi Arabia every year, and there's a big conference there. I think it's December, January time period.
And this is now the biggest commodity investment conference in the world in Saudi Arabia.
That's right. And so they're like, you find it, we'll help you build it, right? But or get it to the point where it can be built and we can build it. And Frank came back and goes, you know what? And he came back absolutely pumped about copper because, he is, historically in the precious metal space, but he's like, copper is the future, right? He came back very much convinced. And Frank is also known for looking for great assets, building a company, and bringing in a team, et cetera. And Libero was a special case because, we were an existing company, we had an asset, and he liked the team because we've done what he was looking to do, right? Which was take great assets and move them forward to get them towards a construction decision. And I don't want to go too much on it, but I did some research, and there's only really been 5, maybe 6, depends, where you cut 10-year line in, large scale copper mines built in the last 5 years. And, it takes us, it's a unique skill set because there's so few mines built. So my experience at Mirador, which is 1, Ernie Mass experience at Kilbre Panama is 2, right? Getting it from that, if you look at the Lausanne curve, there's the excitement around discovery, and then it kind of wanes off, and then it goes back up as you move towards production. And there's a lot of projects stuck in that little piece. There's still not a massive love in the equity space yet, right? With the anticipation of things changing. So there's a lot of great projects that just a lot lack of experience. And I call it, the triangle. You want 3 things. You want an amazing asset, you want an amazing team, and you need sponsorship, right, to truly move things forward. And then, we've we've started back up, and we wanted to, first confirm, and we did some big holes. We wanted to say, and every time they're ending up from top to bottom and they're ending in mineralization. We just, the drill couldn't give any more. And then took a more detailed geological dive into the project. And, we are now fully in the Fiore group. Frank says, I want to partially put my name on the door, right? I want this to be more of my baby. We doubled down and said, let's do it. And one of the big things is we can't continue with one drill. We need to lease another drill and probably be looking at additional drills so that we can look deeper into the compelling question, how big is it, right? But the initial stuff is telling us we might just be touching the tail of an elephant type situation. And that was when we said, let's do it. Let's get it organized. And this is more than just drilling on a little around a deposit area, and there's a bigger story here.
So, you touched on your experience in Ecuador. You were part of the team that put the Mirador mine into production, large copper mine in Ecuador. I think that was 2013. But something else you referenced is just the scarcity of copper mines that have actually made it to production in the last decade. And that's causing the hype around copper today, right? We're running into supply shortage. That's clear. And anybody who pays attention to the macro picture can get that. But you kind of hinted at this. There's another scarcity in the copper sector, and that's the talent, because so few projects have actually made it over the finish line. There's so few people, right, to draw from, to pull from those talent pools who have done it before, right? And that's like an entirely separate issue in the copper world right now. You mentioned one of your directors, Ernie Mast, who played an integral role at Cobre Panama, right? And so obviously, an eye for those individuals, bringing them on the team. So Frank goes to Saudi Arabia. I think it's the global commodity, but it's now, I believe, the largest commodity investment conference in the world. Comes back from that, very excited about the capital, looking for large, high quality copper projects. You find it will finance the bill, right? That was effectively the message that he came home with. This inspires him to go deeper into the company, increase his position up over 13% now. And this project, as you mentioned, is in Colombia, and the flagship asset is the Mocoa asset. So that's what we're talking about here. I got to ask about the name change, Copper Giant Resources. I love it. Why Libero to Copper Giant? What motivated that shift?
I think it's a couple things. One, Frank wants to say, I want this to be mine, right? I want people to know that it's me, right? Not something I'm buying into. It's me. We're officially 100% now integrated with the group.
Yeah.
And then the other big part is that, maybe Libero was Mocoa, right? And there's a bigger strategy here still in the background, which is, a buy and build. And something you alluded to, there is money out there to build big copper mines. They want big copper mines. Smelters need to be fed, and maybe in Saudi they want to build a new complex with smelters. There's experience exploring, but then there's this dead spot in between in development. And for the naysayers who go, well, we've heard this before, and et cetera, what people I don't think understand is in the copper space, it became a whole lot less expensive to expand brownfields projects than to develop new greenfields projects. And so all the money for years and years was pounded into expansion and expansion and expansion and expansion. And it really created is a part of the problem. It's not just the increase in demand, right? Or energy transition or sustainable or AI data centers, which is, the new demand. But why there's such a supply deficit, right? And the naysayers, I've heard this before, and it was because of these reasons. There's really compelling reasons of why this has been set up this way. There's such a drought in exploration and discoveries in copper.
I mean, money's going to go to where the quick and easy return is, and if that's where it landed for the last 10 years, that's where the money went, right? Which is why new production, new assets have been completely starved of capital. Which puts us in the supply deficit we're in today. Because if you look at the demand curve for since the 70s on a decade over decade basis, it's very consistent, right? And why I point that out is because since the 70s, we've seen major technological revolutions. We've also seen global recessions, yet the copper demand continues to tick up between
like
like
a line.
yeah, exactly, right. It's very consistent when you step
Yeah.
back and take the bigger view, right? Um, Obviously, supply kept pace, by the way, until about 2010, and then you started to see this divergence, which has only widened every 5 years since. If you're paying attention on those kind of increments. So, talk to us about Makoa. You put out some drill results in February. The grade looks great. 0.7% on a couple holes that you put out. Just for context, if you're new to copper, mines can go into production as low as 0.3%. And some of the biggest mines in the world are not much higher than that, right? So if it's big enough, it can get done. But grade really matters. So I'd love an update
I would
on
like
the
to add there that it's not just grade, it's depth, right? We've seen some nice drill hole results from a lot of great projects. I'm not saying they're not great projects,
yeah,
but they're thousands of meters deep, right? And so that is not just an OPEX, but CapEx and time to develop, right? Makes a big difference, right? There's a difference between 0.5 near surface and 0.5 800 meters in depth, right? And so, if we're talking about how you evaluate projects, but the other one is there's very few near surface ones anyways, right? We don't see them as often. And that's one of the uniquenesses. There's a curve of BHP's report, and it's the discoveries, and then it's first the discoveries are fall off a cliff, but then the depth also goes like, woo, it goes, all those discoveries are deeper and deeper and deeper and deeper. So as the world is hunger is building up, right? It's not just a question of a lack of discovery. It's also lack of ones that can actually be developed in a reasonable amount of time.
Yeah. And with sound economics, the deeper it is, that just means the more stuff you have to move before you get to the valuable asset. Right. Okay.
Big capital. And, that's a big capital. And when we talk about capital as one of the because these projects are so big, capital is a huge component. Being near first surface is a huge advantage, obviously. And then the other one, is do you have to build a brand new power line out there? Do you have to build roads out there? Do you have people living in a camp? Those kind of things. And that is the other huge advantage. One of the reasons that Mirador got built in Ecuador is because it had a low advantage, but we had to put in a big power line, right? We built, there was a power plant associated to it. And I don't know if people read the news. There's a fight now. They want them to now build that power plant, which for some reason never got built. But it's what makes Warintza attractive because all that infrastructure was put into place. And so Mirador, Mocoa also has that. It has its 220 kVA power lines that go run by the project. It's right off the road system. People don't live in a camp. They go home at night. And these make big differences. It's not just, independently, 30,000 ton per day mill is going to be the same, more or less the same cost anywhere in the world, ups and downs in here. What makes the big difference is the infrastructure, and then the amount of capital required to develop the mine, right?
Well, yeah. And I like how you broke it down into your three compartments: the asset, the team, and the sponsorship, right? And we touched on the team a little bit. Between yourself and Ernie Mast, you've got, two of the very small pool of people who have actually put a copper mine into production. Obviously, being in the office of Fiore with Frank Giustra's resources leads in, not just from a capital standpoint, but from a strategy standpoint as well. But that also ticks the sponsorship box, right? The fundraising box, very important. I always, I don't joke. It's the truth. I think the most important resource in the junior mining business isn't the rocks, it's the money, right? So that's what often runs out. And that's it's the oxygen for any company at this stage. So having those partnerships in place, got to start there. Third bucket you mentioned is the asset in Colombia. Last resource estimate was 2021, I believe, and around 600 million tons of copper, thereabouts.
Yeah, to be fair, it was a redo of a 2018, the initial resource on the initial acquisition. And that's one of the hardest things. I said, it's tough because you have to you have to provide evaluation for a project, but you're really inherited a resource. And when you inherit a resource, people think that's it, right? And everything is indicating to us that this is a much, much larger project. It's basically been drilled off a single ridge line. It's open in all directions, and our drilling is telling us, and I could go into the geology of, really we had a real kind of eureka moment when we were reviewing things around March time period. March time period is when this all happened, where it was at some serious experts, some of them within the Fiore group, and relooking at it And it was like, oh my goodness, right? We might have just grabbed, we don't have a big fish. We have a whale on the line, right? And so that was also a part of the motivation. All these little factors all came in to say, this is the time, to change the name.
Okay, so I want you to touch on something that you brought up before we hit record, and you said you don't want to go too deep into the geology. So I'm going to ask you to give us a little boot camp geology for non-geologists. These conversations at PDAC, you were looking at the resource, and you were effectively describing to me that it had been baking for a lot longer than a lot of the resources that we presently mine had been baking beneath the Earth's crust, and why that mattered. Could you relay that to me one more time?
Sure, and I'll try and do it in the most succinct way possible, right? If you're looking for big, and big matters, right? Because there was a statistic that said, in the next 30 years, or no, way less than that actually, we have to build the 20 largest copper mines in the world to keep up with supply. Keep up with demand, and that's just, you don't want to be building thousands of little mines. It's not saying that little projects aren't going to get built, but the ones that are going to attract significant attention require scale.
Yeah.
Right. And so, there's a couple indicators. One, it's jurisdiction. Where is it? Right. But, there was a time where 80% of every single copper porphyry discovery was in the Andean copper porphyry belt. Right. And the part that goes through Ecuador and Colombia and part of it, Peru, is the Jurassic belt. Right. So, and that's when some of the big discoveries you look at, you have Fruta del Norte, Mirador Norte, Penanza, San Carlos, Warintza, and about a 75-kilometer span in that Jurassic belt that's been explored in Ecuador. So first is jurisdiction, and it's that you get these subduction zones. And then as the next way we're talking about is called fertility. It's the amount of time this system was active. How long was it actively, was there active deposition of mineralization? And we're always curious, why is the moly so high? Why is it so high in Macoa? And it's not just, and I was like, and I've never seen it like where it's blebby. It's like big chunks of moly. You can see the moly. And a work by our manager of exploration, or operations manager, who's getting his PhD right now, one of the few QPs in the country. He age dated the moly flakes inside of the quartz, and it was 10 million years. It had been sitting there cooking for 10 million years. And an average porphyry, can be like, a million and a half, sometimes 3. And sometimes they're really, I think Chuquicamata might have been 20 years or something 20 million years or something. But even like things like Bigham Canyon were 2 million years, right? So it's the amount of time, and this we see multiple pulses of mineralization, and the copper can remobilize all over the place. Sometimes, it's some of the breccias in some of our areas, which explains why some of the high grade. But our moly each time doesn't like to mobilize, just went up and went up and went up and went up, went up. But it also is talking about the size, right? It gives you an idea. Wait, this didn't cook right here, right? It's a much bigger thing we're seeing. And then on top of it is the additional porphyry centers. We have additional 9 targets. It's the amount of veining. There's so many different characteristics that you look for. And when we went through the checklist, it's checking every single one of the boxes. And then the big one, the proof is in the pudding. The last hole's thousands of meters of mineralization from top to bottom of the hole. And that was the other big point, is like, okay, we have to prove this thesis. The market hasn't caught on yet, right? And to be fair, there's been very few what I call graduations, where you go from one valuation to another type of valuation. And there's really a bifurcation in valuations right now between active projects and those that are kind of sitting. But there's been very few graduations. But there have been them. They do exist. And the biggest one is, we got to demonstrate we're behind this. That's the sponsorship's there. Change the name. I'll double down. I'll increase my ownership. And you got to get another drill in there, because, when you're only putting out news every so often, right, you need to be able to take some additional risks and test this overall thesis. So there's so many things, but the big one was the big eye opener, was the years, the fertile age of the project being 10 million years. It shows that there's a lot more going on here. Okay. I'm with you. You want those moly flakes to bake, 10
10 million years at least, Ian. I love it.
I'll
Yeah.
write it down. I'll add that to my recipe book. Right?
No, I appreciate it. And just providing a bit of context there and why that matters. So, and you mentioned jurisdiction a few times. And, as you were talking about that, because you can interpret jurisdiction a few different ways, from a geological standpoint or from a political standpoint. And investors get really wrapped up often in jurisdiction. Colombia is actually, I think, pretty great jurisdiction just from a trade standpoint, right? And I've heard you say, top tier trading partner outside of NATO, in line with Japan and Australia, for example, just so we understand the political relationships. But also, when you look at the copper sector in general, you kind of have to throw that out, because the new mines over the last 10 years, like, where do they come from, right? Like the DRC, for example, right?
That's my favorite example. DRC, Panama, Ecuador, and one or two in Peru, depending on when you cut that line off, right? And those are the older ones, but the newest ones are Ecuador, Panama, DRC, and none of those are on the top of my list for if you look at the jurisdiction. And really jurisdiction, I'm not a huge believer in it, right? It's not the all, the end there or whatever. There's an expression I'm looking for. I'm missing it because my brain thinks in Spanish too much. Because I'm a firm believer that, because I saw it, right? I saw it in Ecuador. I saw it in Panama. I'm going to guess, similar in DRC, right? It's about generating political will, right? I use that term at your conference, right? And building that is the nice part about it. It's called doing things right. We spend a lot of time and a lot of our press releases on the work we're doing socially or reputationally or all these things. And people, why do you put all that fluff? And I'm like, because it's not fluff, right? And I love being told by people, you know what it means it takes to build a mine? And I'm like, well, what do you know, right? There's a lot of armchair experts, right? But the people that have gone through it, they see that you build this amazing strength. It's not approval, it's strength, right? It's different. It's it implies a longer relationship, a long-term relationship and strength. And you have to have a national reputation, right? And that was what developed political will. And it's not different in the United States or Canada, right? If nobody wants you to likes your mine, you're not going to build it. If it's a perception of a huge opposition locally, it's not going to happen, right? Because politicians, are always involved in these big decisions, right? And so I talk about that triangle a lot, and I talk also about the empowerment of the employees, because a single employee can destroy a project too. A simple value system and empowering the employees, and that's how you really get things done. But and funny, I talked to Ernie a lot, and we share similar thoughts, right? It was the same formulas that were so important, right? And maybe lost too in the case of Panama, right? Right. That these are critical things in order to advance project, and I would put that skill, right, and that ability to develop that is more important than the jurisdiction, right?
Well, it's funny, and the concepts you're talking about are super real. I mean, local protests can and often do shut down mines. That's a real thing. If you don't have the community onboarded and they understand how they're going to participate in the upside of this thing working, you can run into real problems. But that's just like good business practice. I think you said doing the right thing. It's kind of been polluted behind the veil of the last 10 years ESG movement and this far different approach, like press release centric operating, right? Which is a different thing. It's like, let's pacify the shareholder bases who we believe they care about this stuff now. So we're going to do some things to pacify that base, but it's not real. It's not rubber meets the road, sustainable business practice, right? Which is what you're talking about.
And that's right. And I hear it a lot. And it's like, yeah, you got to be good. Yeah, you got to build the schools and stuff. And I'm like, well, you don't get it at all. That has nothing to do with what it is. It's about building relationships and having people collaborating, feeling part of the project. That's what it really takes, right? And I would even say building schools is not what you should do, because that builds a transactional relationship, right? So I think there's a lot of misunderstanding. I think it's an oversimplification, but that's okay, right? I think that we've developed that skill set over time, and it's going to prove critical over the long term, because we have an amazing asset, working with an amazing team, not just Ernie and myself, but others involved who are, especially the massive experience in getting things done in Colombia and others. And now we have that critical sponsorship, which will take us, keep gasoline in through these different cycles.
Yes. Okay. And so we put out some drill results in February. You have more coming near term. Just as important, a second rig is on the ground now, right? So we can expect maybe an increased cadence of results to hit the wires. Is this correct?
That's correct. I mean, we don't use helicopters to mobilize drills, right? So people are huffing it up the hill. I mean, seeing some amazing, great, and we've had a little bit of rain, so we're a little bit slower than we were hoping we were going to be. But a big part was, we put out, and really the beginning was about redemonstrating the potential, and really for some reason it didn't catch. But, the first 3 holes on the project was 850 meters at a 0.78. Another 700 meters at a 0.63 and 992 meters at a 0.51, right? And there's intersections of, 1% intersections within that, right? And these are from surface. They were just amazing holes. If you look at the best holes in copper this year, right? Where we're sitting on the top of the list, and they're near surface, right? But people want to say, okay, yeah, we've seen this, whatever, but we really need to do 2 things right now. One is, we need to step out. And this hole that we just finished and we'll be releasing soon, was, straight to the east into unknown land, right? Obviously, we were modeling and hoping and understanding and modeling our breccias, because they have a tendency to carry the higher grade portion of the deposit, pushing out straight east. But we really need to get out there, right? Not big step outs around the deposit area, but we also have a bunch of other targets on the project. So we need to be doing both at the same time. And so there's a strategy here to be mixing up resource expansion, right? Really demonstrate how big this deposit area can be, right? And also testing some of the additional sensors, right? Because they're additive, right? You hit another one, it's a good indicator that the thing could get twice as big, right? And so that was the decision making. And to be honest, still expect some of those holes that, market really likes, because we still have to focus. We still don't understand the structural controls. We still haven't seen the bottom. We don't know where the feeders are coming from, right? And understanding these breccia systems, and I don't want to confuse people with breccias, because people hear breccias and there's like these tubes of no, that's just where a high grade portion of this project is. And then the rest of it is still the nice, normal, disseminated copper porphyry. And so there's going to be a lot going on, and we need more drills, and the project deserves that, right? The project deserves multiple drills turning, and hopefully we can build up some momentum in the near term to advance the project quicker.
So I got to ask you, Ian, how do you, you've got a team that's been there and done it before a couple of times, which is rare. You've got the financial support of one of the biggest and most credible names in the industry. You've got an asset that, if you look at recent copper holes over the last year, you guys are at the top. You're putting at the top results in terms of drill results in the copper sector. You don't feel like the market's recognized that yet. My question for you is, and I know you're an engineer, not a capital markets guy, which is why I love talking to you, but I still have to ask, what do you think that catalyst is going to have to be? Is it an updated MRE? Is it, we've got this thing to 1 billion tons and here's the validated document? Like what do you think that trigger point? Or is it just, sometimes you got to just keep building, you got to keep moving, and you can't control the market, and that doesn't matter. You just stay hard at work, and opportunity will strike, and you'll be ready because you were working when the market wasn't ready for you. That's kind of how I think about it, but how do you process?
Yeah, so the way that I talk about it and the way I think about it, and the original thesis behind, even when Frank originally got in, was market is, between 0.1 and 0.2 cents in the ground for a decent project, for a good let me say that correctly, for good projects, because we've seen a lot of them. Good projects, they're just kind of sitting there, right? They're not moving. And the bottom end of projects, good projects that are moving forward, is the 1 cent in the ground range, right? The problem has been is if you look at the ones that have, I call it the cool kid club, right? Because it's this bifurcation in the valuations. The difference was most of those companies already had that valuation in when there was some wind in the market. So they build up them and then they've been able to hold it in or drop or move or, but they've been around there. But there's been few that have graduated from the lower to the top. It has happened though. Right. And Corex is a great example of that. Right. It was actually a project at one time we were talking and it had, the initial touchy feelies to say, hey, maybe we should do an acquisition. We have similar valuation, similar thesis, could help you with the team, blah, blah, blah. Right. It looks like they found their team and they've been able to do that. Right. So I feel like, I don't know, we're at a Black Friday sale. We're at the front of the line. Our face is stuck up against the glass and just do the right things. And that's what Frank said, right? Frank, like, this is nuts. Okay. I'm going to double down. I'm just going to do it cause it will happen. Right. Mm-hmm. And it's not, and yes, I thought it was going to happen before now, right? When we put out Whole 43, many years ago, it went to $100 million valuation in a week, right? So I thought it would have happened, and I thought these drill hole results would have got the attention back to the project, right? But a lot of it is market dependent, right? And we're in a momentum market, right? So I feel like when that door opens, we'll be the first through that door, right? And it will happen. And we're not talking a 20% difference. And that's that I'm not talking about little pluses or minuses. We're talking there's between 0.1 and 0.2, and a 1 and a 2 is, 10, right? So I feel like there's a lot of growth there. There's it could be very explosive. And I look forward to when that momentum starts kicking in. And I think one of the big things that we thought most important, demonstrate it's moving forward, demonstrate there's a commitment, and also start, showing what this project's potential really could be.
Yeah, I love that. And a few things that you pulled out of there, there's going to be a lot of companies that will try to strike when the iron's hot, right? And I always say, no, you got to make the iron hot by striking. That's how you do it, right? But, both things can be true, right? When the market is ready for you, you may not be ready for it, right? And a lot of companies will be scrambling to get to raise some capital, get to work because the sentiment's back, right? But those that stayed hard at work were able to raise capital when the market wasn't super favorable. They're the ones that always hit the high water mark. And you see that in every cycle. It's like those who just, stayed grinding, stayed working. And then when the market caught, they were ready, right? And far ahead of the peers. I love it, man. Look, Ian, exciting time for you. Copper Giant Resources. Love the new name. Love the new votes of confidence from Mr. Giustra in the Fiore office. Love the vision and love the drill results. Thank you for coming on today. Anything else you want to share with, can I ask you one more question? This is, maybe we're going to divert a little bit here, but because the last time we spoke was in January, this is pre-trade war. So we're now in a new era, maybe, where supply and demand of key resources is far more important than it was 6 months ago, definitely a few years ago. Do you spend much mental energy thinking about that? Do you process? Are you like, no, my job's to find metal and I'm going to do that part, right? And the rest will figure itself out. How do you process?
Of course I process it because I think about how you build a mine, right? I see a window developing, and I guess, did we talk about it? But we might have mentioned it, right? That in 12 months, there's an election in Colombia.
Colombia, yeah.
Elections are coming up and the current president cannot run again. And it's another reason why the motivation of why we are pushing, even if, market isn't responding, we're pushing because we know the windows open up and you can have these spring type events happen when you have a new president looking how can they demonstrate investment? How can they demonstrate those things? The pendulum swings, right? And I think there's a good reason that Freeport-McMoRan and Rio Tinto and others are showing up and having offices now in Colombia and looking at projects and advancing things because they see the same thing. They see this window opening up. So it plays a lot into the thought process and how to make sure we're aligned to that overall agenda, right? Because when these projects get built, that always adds in. Now, a instantaneous or short-lived or whatever you want to call it trade war, no, right? But what are the implications of that? There's going to see much more nationalism. You're going to see there's going to be a breakup and a redistribution of supply chains, those things. So yes, it enters in my mind. I'm very happy that Colombia is a major non-NATO ally, as you mentioned earlier. That's very important. Because when this is, there's spheres of influence, right, that you can see playing out. There are some good projects in the United States, but there's a lot even more. And I don't think the United States realizes how weak it is to the start of those supply chains, which is we hear a lot of talk about critical rare earth metals, et cetera, but not enough on copper. And you run out of copper, or you don't have copper, then you can't build electric motors. You can't build electric motors. You can't build electric vehicles. And I think we see it playing out. I think BYD is spanking the planet right now because they've secured those supply chains. And I think the writing was on the wall that said, one day they're not going to sell me the electric motor, right? One day they're just going to say, nope, sorry, can't have it. That you can buy the car, right? And that was dangerous. And so I think as the tariffs opens up the Pandora's box maybe, and people start looking on the inside and paying attention to things that they just took for granted for a long time, I think that's going to have a massive impact, not just on copper, but the whole space as a whole. So, there's things, this is a lot of people are saying it definitely feels like a bull. I think we're in a bull, even though the market isn't real, it's sputtering, right? Because of all this uncertainty in the planet, but it feels like it, right? The amount of conversations, the amount of, things that are happening in the background have accelerated about 5 to 10 fold without a doubt, right? So it's becoming interesting times. And so, yeah, this occupies a lot of the brain because I'm not a geologist that thinks in fertile ages of 10 million years, but I do think in terms of 5, 10 years, what 2 years, right? And think ahead of time and try and make sure that the platforms are established ahead of time. So yes, I do think about this.
Yeah, no, I'm glad I asked. Interesting take. Thank you. Okay. And you're right. It's copper's not a discretionary line item. It's absolutely an essential. EVs are not, without copper, the lights go out. I mean, it's that simple, right? We can get into AI demand and EVs and all of it. You don't even have to though, right? It's essential.
I'm going to steal another 2 seconds for anybody who ended up watching this long, but people can agree on the energy transition. They can be in V's, and maybe tariffs took away global warming. Yeah, no, we can just put that on pause for a little bit, right? But I think losing the battle to electric vehicles hurts. We don't realize it, but we've lost, right? BYD is exploding, right? It's so big, right? And all the other, and then that's not the only brand for coming out of China, right? And now they're realizing there's not much we can do about it because it's called the assassin's mace, right? They control the supply chains. And so again, I'll sell you copper. No. Now I'll sell you copper wire. No. Now I'll sell you the motor. And they just go up when they get more and more control over the overall chain, and you just can't, you're too far behind the 8 ball. Right. But you cannot lose the battle for AI. You cannot lose it, right? It is, and it's not just important, and it's not important for countries because we might be surprised at how not intelligent people are that run our countries, right? And all over the planet, right? But companies think about this stuff all the time, right? And they can't lose between each other, right? Either, right? So when they go down to okay, what do we need? We need more power. Oh, buy that power, that nuclear power plant down the road, right? They're going to start going and go, we need to make sure we're building these supply chains, right? Because we can't have a 6-month delay because we don't have the copper wire.
That's
or we don't, right? And it's not that they don't have it. It's that it gets delayed. It takes longer, right? And because people don't really feel it, they always expect this explosive event when physical doesn't show up. But it really is, it's not going to be a month. It's going to be 2 months. That's 3 months. No, that's 5 months, right? So it's the delay in supply.
You're touching on this theme that I'm kind of watching, and you're right. And I love how you use those comparisons that if we're being real, we've lost the EV war. And BYD makes excellent cars, and they're very cheap. We can't buy them here. That's trade restriction. That's not because we don't want them, right? That's regulation keeps them out. But if you're Amazon, if you're Meta, if you're Microsoft, you may be paying attention to that, and you're in the AI race. And that's why all 3 of those companies are making plays into the nuclear sector, because they've realized What's scarce here for it's power. We're going to need far more energy, and let's pay attention. We can't wait for the government to supply it. We can't wait for federal agencies to keep up. We have to take this into our own hands, which opens up like a new era of the technology and energy merger, major industries. I don't think we've seen that before, where your big data and your big energy under one roof. And it's, who was I chatting with? Scott Melby, and just, fascinating little maybe turning point in history that we'll look back on in 20 years and say that right there.
I agree.
You do. Yeah.
100%. I feel like, that was it. Right. And that was a massive, massive chain. Right. And there was an opposite one, right? The original the Model T was built from, they had rubber plants, and they had coal mines, and they had iron mines, and they had all the supply chain to build that supply chain, the one that we know, right? The real supply chain at the end to fabricate the cars, right? And then globalization hit, and we started, no, let's just de-risk this stuff and blah, blah, blah. I'll focus on what we're core about. And we're seeing that go back the other direction. People are saying, no, we have to look outside the box. We can't keep our blinders on. And they've got big checkbooks because they will spend because they cannot lose. Right?
100%. It's existential in that it seems existential, right?
It seems existential
to me. Yeah. Interesting. Oh man. Ian, it's always fun chatting with you. I love it. Thanks so much for coming back on the show. We're going to have to do it again because I feel like your cadence of activity is heating up, and it's a pretty pivotal time at Copper Giant Resources. I love it.
Thanks, Jay.
Pleasure's all mine.